Good evening, everyone. On behalf of IIFL, I would like to welcome all of you to the 4Q FY18 conference call for Welspun India. From the company, we have with us the key senior management, including Mr. Rajesh Mandavewala, Managing Director, Mr. Altaf Jivani, Director of Finance and CFO, and Mr. Akhil Jindal, Group CFO and Head Strategy. I would now like to hand over the call to Altaf for their comments. Over to you, sir.
Thank you, Avi. Good evening, ladies and gentlemen. On behalf of Welspun, we'd like to welcome all of you to this quarterly con call. During FY18, our revenue was 6,132 crores and EBITDA was 1,205, which is 19.65%, which is in line with the guidance which we had given at 20% at the beginning of the year. We have, during the Q4, actually our revenue has seen sequentially 8.5% growth. So we are seeing green shoots now, uptakes in the offtake from the retail. The highlights for the current year actually during FY18, one was the retail business, domestic retail business. We have seen a substantial growth of 19%. So all our investments into building our brand, so putting the team, launching the campaign and our product strategy seems to have been yielding results now. And similarly in Christie, which is our global brand, we have seen actually almost 71% growth in the e-commerce business. Now almost 10% of the revenue is contributed through e-commerce. So that shows the power of branding which we have achieved in Christie. And we hope to repeat a similar for other brands as well. During the year, actually, we have spent almost 60 crores in brand building, which is so 19.65% of EBITDA margin is after taking a hit of 1% impact because of the brand building exercise, for which the benefit is going to come in future. But all these expenses are being booked right now. We had for the current financial year, we are seeing early signs of revival and the offtake for the the destocking phenomena which started in the month of July last year. We seems to have seeing the end of that almost, and we expect to return in the growth trajectory again in FY19. Some of the key initiatives, which was launch of spaces, which the ad campaign, which some of you would have seen, was well received. And as I mentioned earlier, we have seen 19% growth. During the year, we also launched WellTrack, which is the industry-defining traceability solution, which has created a buzz in the home textile industry. And these products are now currently available on the shelf in USA. We are going to spend a couple of million marketing dollars on WellTrack, and we believe what we did with Hygro in 2015 by creating a pull factor when we started creating a marketing campaign there. We believe a similar promising situation we are in right now vis-a-vis WellTrack. And the millennials are quite excited when they see that the power of traceability comes in their own hand and they can know exactly what fiber has, the fiber which has gone into that particular product. So we believe that the Hygro cotton, which was one of the most successful innovations so far, we believe we'll be able to achieve similar story here in WellTrack. In terms of innovation, we have almost now 30 innovations. So we added 3 more innovations during the year. And the total revenue coming out of innovative products is about 37% now. And the total revenue coming from the branded product is 17%. The top line degrowth, which is about 8.8%, there is a volume impact of about 5%. There is an exchange impact of about 1.6%. And there's an impact of the drawback rate because of the GST, that is about 2.2%. We have also the flooring project. We have actually now, we propose to start in Telangana. The project cost will be approximately 1,100 crores. This will be about 27 million square meters, and we will be ready with the commercial production by October to December 2019. This will be funded through debt equity of 70 to 28%. In terms of the object clause, we had just to align the parent's object clause with the flooring, the subsidiaries object clause, we had actually passed a resolution in this board of WL. The guidance for the current financial year, that is FY19, we are saying we'll be able to achieve 8 to 10% top line growth, which will be predominantly volume driven. We will have an EBITDA margin of 19 to 20% for the full year and a capex guidance of 900 crores, which will be mostly because of the flooring project. Now the top line guidance, all these are actually annual numbers, so we might see in the first half the top line growth could be muted because of the base effect pre-GST where the drawback rates were higher. So for the full year, we'll be able to see in the second half we will be able to touch the double-digit growth. And we have also revisited our 5-year plan, and we are confident we'll be able to deliver on the $2 billion top line and a zero debt situation by end of fifth year. So with this, I would like to keep the floor, open the floor for question answer. Thank you.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Anyone who wishes to ask a question may press star and 1. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question is from the line of Bhavesh Cheda from Enam Holdings. Please go ahead.
Yeah, good afternoon, sir. Few questions. So your top line growth for next year, if I understand this year, everyone has been facing sharp volume declines in towels. So is that volume decline run rate reduced? It is flat now? And what are assumptions for next year? And what are you hearing from clients on that segment?
So Bhavin, hi Bhavin, this is Rajesh. And
yeah, hi Rajesh.
Yeah. So we believe this the worst is already behind us. So I think this the whole industry suffered this on account of destocking in the last year, and so this we believe this we are at the end of that cycle. We are already seeing, let's say, this better offtake and let's say this commensurate buying as compared to what our clients are selling. So this we are already seeing that happen. So this is not about let's say this hoping for the future, but we are already beginning to see that happening, and this is happening in the towel product category as well. So this, as we speak, this we are already seeing this tapering of the effect of destocking as it happened last year. So the growth will come. This, as Altaf said, the first couple of quarters, because of the base effect of the GST, I think, where drawbacks were also reflected as part of revenue and so on and so forth. So we might not see this very handsome, let's say, this top line growth numbers. But this on an annualized basis, as Altaf mentioned, so we are looking at 8 to 10% this revenue growth. Definitely volume growths this in those at those levels.
The second is rupee is depreciated sharply by almost 4% in last 1.5 months. So our 10% growth guidance is partly factoring that, because we are at a very rupee depreciation helps us a lot. So can you give some guidance there? Because I assume almost 40% of your exposure is always open.
Yes.
So we benefit there, and that's the reason that we are already factoring that in 10% growth.
Yeah. So this so let's say first of all, let's say this any movement in the exchange rate, this generally would not impact P&L, let's say this in the immediate 2, 3, 4 quarters. And the reason being we are anyways hedged for 60% of our this next 12 months this exports. And the other thing being, see, this end of the day, this all ingredients that go into the product, may it be cotton, may it be fuel, may it be coal, or this dyes and chemicals which are oil derivatives and so on and so forth. So while we buy in rupees, they are dollar denominated. So this it's natural to assume and believe that as the rupee depreciates, the commodity prices will go up this in Indian rupees, and so that will compensate any gain that we get out of the remaining 40% unhedged this exchange rate benefit that we might get. So I'm afraid we might not see a very positive impact of the exchange rate in the current year, but definitely as we keep selling exchange rate this as per our policy. So right now, the sales that are happening are at 70 plus. So, and they'll continue to happen at that, which will start hitting our P&L in the next year. So as we run out of the current hedges, which are at a slightly lower price, the impact of the exchange rate will start reflecting.
Yeah. And my last question, if you can give us the geographical sales mix of FY18 versus FY17?
So US is about 64%, and Europe is about 18%.
Okay.
India is around 6.5%. Okay. And ROW is 11%.
Thanks a lot. Yeah.
Thank you. A reminder to our participants, if you wish to ask a question, you may press star and 1. Our next question is from the line of Priyank Borecha from B&K Securities. Please go ahead.
Hello, sir. Thank you for taking my question. My question is, in the guidance, you have said that you are increasing the flooring capacity to 27 square millimeters. May I know, do we see any major demand coming in that sector? So we are increasing it?
So what we are looking to do, Priyank, is, let's say this, so earlier our goal was to actually cater to the institutional side of the business. Looking to the opportunity now, we want to make it a comprehensive, let's say this offer, and also get into the residential side of flooring, which in fact is a much bigger addressable market, and consequently, let's say this higher capex. And also we are moving the project from Gujarat to Telangana. So and in fact we will start executing the project as we speak. So there is some impact of let's say this moving the project away from this Anjar into Telangana as well. But principally it is about, let's say this making our offer, let's say adding things into our offer which are more holistic and which will actually cut across institutional, commercial and residential markets. So, in short, while we are increasing the capacity, it is also disproportionately also increasing the addressable market for us.
Okay. And while shifting from Gujarat to Telangana, are Telangana offering any major benefits than Gujarat?
Obviously, so so we are, let's say this, we did our math and it looked, let's say this, pretty obvious that this considering apple to apple the incentive. So we were much happier, let's say this, looking at the package that we got at Telangana. So, so which is why, and then there's been an enormous amount of concentration that is happening in Gujarat as well. So, we thought this is the right opportunity to move, let's say this our site to another location. So mind you, we have already, we employ close to 18-20,000 people there, in Anjar already. And, so from that perspective, we thought, now that, we have some better incentives in Telangana, and which kind of covers the additional cost that we are going to incur on the project. So, so we thought this is the right time for us to move site.
So can you give some color on what incentives are you getting if it's possible?
We can take this offline, and we'll be very happy to discuss, let's say this, whatever, and in any which ways it's in public domain. They have a policy that they have announced, but our team will be happy to take you through details.
Okay, sir. Next question. A few years back, we had started an ancillary model which we had implemented. So what is the status of that?
So we are on course. We have about 11, 12 ancillaries which are already in operation, and so most of our this important trims, packing materials, and everything, most of them we have covered. There is a spinning this ancillary which is already operating and also growing, and so we are now in discussions with a couple of interested parties on the weaving side as well, and so it's working well for us. And I think within the company we have now enough this yarn making and fabric making capacity. So and this also there is, and then outside these ancillaries are happening, and we are also finding it comfortable now to source, let's say some of the commodity stuff that we need to do both for yarn as well as fabric. So I think it's moving. I think we are making progress there, and we would want to see this at least one, if not two, fabric companies emerged there to actually complete the story, and so we are in discussions with a couple of them.
Okay, so thank you. I'll get back in with you.
Thank you. We'll take our next question from the line of Dhruv Agarwal from Cressida Investments. Please go ahead.
Yeah, good afternoon, sir. So my question is related to the currency movement. So now we see that the rupee has, depreciated sharply from 63 to 68. So how do you see this impacting your top line as well as EBITDA for in the current year FY19?
So, Dhruv, actually, see, as RM mentioned earlier, since we have 60% hedges, which is locked in, and remaining 40% which is open, where we'll get the benefit of the rupee depreciation, but there are corresponding costs which are sitting, which are though in rupee terms, but these are actually dollar denominated. So we don't see a significant impact on EBITDA. So our guidance of 90 to 20%, we say is what we are giving for the current year.
Okay.
After knowing this fact that rupee has depreciated to current levels.
Okay. And sir, how do you see the volume numbers moving? If you could tell me what was your total volume growth for FY18 overall on a blended basis?
So FY18, as I mentioned, we had 5% degrowth in volume terms. Now, just to share the specific numbers for towel and bedsheet, we have actually our plant utilization for towel and bedsheet is almost 80% for FY18, and rugs was about 65%.
Rugs was 65%.
Yeah, and the capacity is 80,000 tons for towel, which was effectively it was 76,000 for the full year because it got commissioned late during the year. Okay. We have 90 million meters for bedsheet, and we have about 10 million square meters for rugs.
For rugs, it is
10 million square meters. That's the capacity.
10 million square meters. Yeah. Okay, and for FY19, how do you see the volume growth, sir? Do we see it in lower single digits, or how? What is your view on it?
So this 8 to 10% guidance which we are giving through actually is predominantly volume driven.
Okay. Okay. Thank you so much, sir.
Welcome.
Yeah.
Thank you. We'll take a next question from the line of Nihal Jam from Edelweiss. Please go ahead.
Hi, sir. Good evening. My apologies if this question was asked. I was just able to connect. But I look at the Q4 growth for this quarter, the degrowth. It has been highest among the 4 quarters in FY18. When we had the impact of target in the base for Q4 FY17. So just wanted to understand that anything specifically changed in this quarter, and how has the situation on the destocking that we've been discussing changed? Because in Q3 you did mention you believe that Q4 should be more or less the last quarter where we do see the destocking reaching its peak, post which you expect it to improve.
See, Nihal, this is a quarter-on-quarter thing. So there's nothing that is worrying us about this, let's say this quarter-on-quarter situation. So this, as we mentioned, so this FY19 we feel good. I think the destocking impact, and the only reason was a destocking impact and nothing else. And we are seeing the tapering away of the destocking already happening in the marketplace, and we are seeing, let's say, this better order flows into the company, which will start getting reflected partly from the second quarter of the current year. So I think this, which is making us more confident. Let's say this in terms of guiding 8 to 10% kind of a volume growth for the current year. So there's nothing in particular. I think it was a destocking thing that impacted the business, and I think going forward, we are clearly seeing that the tapering of that is already happening.
Okay, sure, sir. So the second question is, reading one of the press releases you've given that you're looking at altering the objects clause. So is there any new venture that we are planning or new line of business that we can expect in the coming years from Welspun? Not really. So this is about the floorings business. So, just as a matter of abundant caution, we are just altering the object clause. So, but there's nothing else that is planned. So it is about the floorings business that we've been discussing. Okay. And just one last question on the flooring business. I do understand that we are planning to shift it from Gujarat to Telangana, but there has been an increase in our capex cost from 600 crores to 1100 crores right now. Am I getting that right?
Yes, you are getting it. It was not 600, it was slightly more than that. So we were at about 700, which is moving up to 11, but consequent, there are two things. A, there is a fairly larger level of integration that we are building in the project, and the second thing is the capacity is much larger upfront, and also it's a wider product mix that we will start with. So, that is the reason why the capex is going up.
And what is the new capacity?
It's 27 million square meters on a nameplate capacity level, and it's a much more wider product mix that we are talking about.
Okay, and this was earlier when we were having the earlier plan. What was the capacity then?
It was 13 million square meters, Nihal.
Okay. Yeah. Sure, sir. I'll get back on the queue for further questions. Thank you so much.
Thank you. Our next question is from the line of Saket Kapoor from Kapoor Company. Please go ahead.
Good evening, friend. So just continuing to the last participant. So the new facility will be coming up by what, in which financial year?
So FY20 Q3 is when we are expecting commercial production.
And sir, what has been our EBIT margin? What are the margins we are contemplating on the project, sir?
So this is, it's a new business. The business will take a while to ramp up. This all in all, but we are looking at this high in the middle digits in terms of, let's say, this project IRR over the life cycle of the project. So, definitely in excess of 15% IRR.
So this is totally export dominated?
No. In fact, it is going to be more domestic driven than exports. So the heart of the business is going to be in the domestic market.
In the domestic market. And just currently, sir, if you could throw some light, what is the market size and who are the dominant players in the segment?
So, see, these are all new kinds of product categories. This essentially generally serviced more by imports than anything else. So, and we are looking at it as a complete, floorings as an alternative flooring. So, the entire floorings market is let's say, so we are looking at the entire floorings as a market for us, whether it's commercial, residential, whatever. So, we believe the market size is between 30 and 50,000 crores. We are still working on, let's say, this is the addressable market for us, but it's a sizable market, and we are looking to take a piece of that market.
So I missed the initial commentary, so just a very small brief on that. So what were the factors that resulted in the degrowth for FY18 numbers, and how many factors are we able to mitigate and reverse for the current financial year?
So we believe there was a destocking phenomena. There was an impact of this online, some online, offline sales moving to online, and also, let's say there was an impact of the incentives as they changed this on 1st of July last year. And also, let's say there was some impact of, let's say, the Egyptian cotton issue that we had year on year. So these are the four this reasons why, let's say, we saw some kind of degrowth. And mind you, the volume degrowth is only 5%, while financially it looks higher, but volume, this was only 5%. And we believe we have mitigated everything. And as I said, that we are already seeing symptoms of growth getting reflected, let's say, in the current order position, and hopefully will start getting reflected from the second quarter.
Right. So first quarter will be lean quarter because of the GST factor.
Correct. So the baseline. So it's not an apple-to-apple comparison, which is why we are talking about the second quarter here. So we should start seeing some impact of it coming from the second one.
Right. So in the bed sheet segment, sir, what is our market share globally?
So this US is our big market there, and where we own about this 10%. There's definitely in excess of 10% market share there.
Sir, out of the Indian players, sir, I wanted to understand what is our pie share in the bed sheet segment, and who is the second, third player?
So there are several, let's say, players out of India. And I believe and there are no published numbers as such. So this for us to know this who's doing how much is a little difficult, but there are some significant players, and earlier it used to be Alok, now it is to some extent Indocount, also Himmat Singha. So, these are some of the key players that we compete with.
GHCL is also there in the...
Yes, they are also a part of the mix.
They are your competitors.
Yeah.
Right. Thank you, sir. I'm in the queue, sir. Thank you. Thank you for answering.
Thank you. We'll take a next question from the line of Abhishek Jain from Almonds Global. Please go ahead.
My question has been answered. Most of the questions has been answered. I just want to understand the debt repayment plan, because we have already, I've seen there's hardly any repayment till now, and what I understood is basically we are on a way to repay, become debt free or net cash company by 2020. So what will be the debt reduction from?
Not 20, now 23. We won't be debt free by 20. We will be by 23, and this one big reason being this the capex that we are making on the floorings business.
Okay.
And see, if you look at the way we have managed our balance sheet, so we've been almost flat on net debt. So we have actually calibrated our capital expenditure to the cash flows that the company has generated, and consequently, our net debt at 3,000 crores has been flat for almost 5 years now, and that is our intent for the coming year as well. And beyond that, we are expecting sharp reduction in the net debt.
This year, I'm not going to see any increase in debt because of this 900 crore capex?
No, so we are still looking for to maintain, let's say, this our net debt position in the current year, despite the capital expenditure that we are planning.
Okay. Thank you. Thank you.
Thank you. We'll take a next question from the line of Nisarg Vakaria from Lucky Investment. Please go ahead.
Yeah, good evening, gentlemen, and congrats on a decent set of results in challenging times. First, I wanted to ask you, sir, that, incrementally you've said in your presentation that a large part of our export revenue will come from online in the US. The realizations that we make over there are similar to what we make to the Bed Bath & Beyond type of customers?
Look, most of our online revenues are coming from our existing customers there. So, it's the same realization. It's almost the same products. So, and they are bought by consumers of our customers' websites in most cases. So, there's not much, this difference of this in most of the cases. In fact, it's the same product at the same price.
Okay. Sir, when do we endeavor to reach a $2 billion top line? I'm sorry.
So our earlier goal was FY21, but we'll have to push it back now by 2 years for obvious reasons.
Sure.
So we still believe FY23 is the year when we should be able to double from where we are now.
So from forget about FY19, where you're guiding for a 10% growth, but from FY20 onwards, you'll have to start pushing for double-digit growth.
Right. So see, the floorings business will also come on stream by then. So, we are very hopeful that will also give us some impetus, and also this investments that we are making into brands.
Right.
Let's say this both Christie as well as this in the domestic market. So, that will bring some acceleration on the B2C side of our business as well. So, consequently, this all put together, I think we should be able to get to what we desire to.
Sir, FY20 onwards, can we start clocking much higher EBITDA margins because of natural delta and operating leverage in our business?
The times are such that it is difficult to forecast now the next 3 months. You forget about 3 years.
Sure.
But to give you comfort, see, if you look at the company's performance on the continuing business. So we have on an average delivered, let's say, this 20% EBITDA. Some years have been good, where we have had some tailwinds. There have been some headwind years. So, generally, if you take 8 out of the last 10 years, we would have delivered around, this 18 to 22 kind of this EBITDA. So the business is good for the current, this 18, 20, 21% kind of margin. So, and because of the variability, this playing into our business. So from year to year, the margins can be different. But, I think when you take a 10-year view of the company, I think we have delivered those kinds of margins. And we believe we are good to deliver those margins in the future as well.
Right. And, sir, there was a severe hypothesis of, significant capacity additions by players across India and some sort of a price war and price competition in the US for selling bed sheets. Has there some sort of, has it subsided or that is still going on because we have some large players sitting on unutilized capacities?
Yes, very candidly, there is unused capacity in the business, and it's not only in sheetings, it's in towels as well as sheetings, and, so there is unused capacity. It is not new. So, this has been sitting there for almost a couple of years, and, and so it'll take a while for this capacity to get absorbed. But, whatever the impact of this, you see it in the results for FY18 already, and we have factored all that into our guidance when we say we'll be making 20% kind of margins in the current year. So, we've actually factored all that in.
So we are actually selling the same products at lower prices, or
no? We have not reduced prices with any of our existing businesses or with any of our clients. So, we have held our prices. Albeit the industry was in a position to increase prices when the cotton prices went up and the currency appreciated, which we couldn't because of, let's say, the overhang of the capacity. Right. Honestly, otherwise, there was all the reason for prices to go up in the market.
But now we are again experiencing those tailwinds of lower cotton prices and depreciating.
Look, the cotton prices are not going to be low. So with a depreciating currency, the rupee cost of cotton will go up. It's a natural thing. Cotton is an internationally traded commodity. So, so Indian cotton will start looking cheap at the current prices internationally, and it will start getting exported more. So, prices will catch up. So, I don't think we are going to see cotton advantage really.
Sure. Thank you so much for answering my questions. All the best.
Thank you. A reminder to our participants, if you wish to ask a question, you may press star and 1. Our next question is from the line of Dimple Kotak from SKS Capital. Please go ahead.
Yeah, hello, sir. Sir, I would like to know what is your cotton inventory currently standing at?
So we are at about 4 or 5 months right now. So August, so we are currently stocked until August, and plus, of course, we have WIP and other forms of inventory as well.
And is it like there were certain reports which said that cotton prices have gone up from 112 and 15 levels to 119. Yes. So our new procurement will be at these higher levels post-August?
Of course. So we'll have to procure the new cotton at current market prices. But see, as Altaf mentioned, so there is the unhedged part of our exports, which is 40%, will hopefully compensate the higher prices that we will pay for the cotton.
Okay. And so there are reports from the likes of JP Morgan that Macy, Walmart, Bed and Bath, they are not doing good in the market. They have not been able to perform well even in the best of the seasons. So then if your end customer is not performing well, how do you see incremental growth coming in over the years?
No. Look, the market, when we look at the market in totality, so the American market is even now currently growing at 1.5–2%. And even in our product category, it is growing. Even last year, it has grown. And our customers are also doing well. So, in our product category. So last year was a year of destocking. There is some rebalancing happening between offline and online retail. But the market is looking good. The market is continuing to grow. And there's some rebalancing. So some retailers, some of our customers are doing better. Some are not doing as well. But all in all, the market in totality is growing. And there are reports out there, which are suggesting that, this retail is not going anywhere. So it's going to stay. It's going to continue to grow. And it looks like in our product categories, let's say the offline, online, this formula is also now set. And, so all in all, things are actually stabilizing. And retail also will continue to grow from here. So, you might have lesser stores, but they might be offering omni-channel experience and selling much more out of their existing stores and, so on and so forth. So there is nothing to be despondent about. The market is doing exceedingly well. It is growing and it will continue to grow.
Okay. And sir, in terms of your online disruption, what would be the disruption for your product category?
So look, we expect this to be, let's say, this around 15–20%, and we believe that has already happened. So, beyond this, we are only likely to gain from this situation and not lose. So, and perhaps, it's a pendulum effect. So, when things start swinging, sometimes the pendulum swings too far down the other side. So, in our product categories, we believe that is happening. So, I think the market is almost settled down, and if at all there is change, it is only going to benefit us.
Okay, sir. And so finally, the margin guidance that you had given, is it including other income?
Yes. So we are talking about total EBITDA here, and look, most of our other income other than treasury is actually in the form of operating income. So, most of it comes from exchange rate, and that's a part of our business strategy now. This accounting standards mandates us to report it as another income and so on and so forth. But otherwise it's all business income other than some treasury that we make.
So what would be the quantum of the treasury income so that we can deduct and rest?
Actually, most of it is in the nature of exchange, let me tell you. So, this very little of that would be treasury.
Okay.
In Q4, half of it is actually this one.
So, yeah.
Sorry?
In Q4, out of 28 crores of other income, almost 14 crore is actually relating to operations, which is exchange gain. So, actually as per accounting standards, we have to classify it as other income, but actually it is operational income.
Okay, and what is the ballparkish run rate for it?
Pardon me?
So what would be the ballparkish run rate? I mean, if you can give a breakup even in your note, that would be helpful from the next quarter. That what would be the forex exchange income?
Yeah, so this gets disclosed actually in the annual report separately.
I have a slightly different view on this. So, actually it's a part of our income. So, this hedging is a part of our strategy.
Exactly. Yeah.
And so, it's a part of business income now. Unfortunately, we have to call it other income, but, it's a part of our business. So, we wouldn't want to complicate things. So, it's actually more than 50%. If you ask me, the treasury income is about this 10 crores out of the total other income. And the rest of it is all actually related to business.
Okay, so that's all from my side. Thank you so much.
Yeah.
Thank you. Our next question is from the line of Ram Modi from Prabhudas Lilladher. Please go ahead.
Hi, good afternoon, sir. What is the status of the class action suit, sir? No?
So still work in process. Unfortunately, we have not made much progress, and as we get into this, we are learning. Let's say that things move the way they move. I'm afraid not much progress has been made on that.
Any chances of out of court OTS, sir? There?
This early days, the matters is still there. So but nothing substantial has changed from, let's say, the last time that we discussed about this. So we are more or less at the same position right now.
Another question was, sir, how much is this online players also would be procuring a lot of our bed bath linen from the players. So how much is our penetration into suppose?
So we are pretty happy with our penetration. So with the large players, we have already begun doing business with them. So both private label and otherwise. So when that kind of business starts happening, it makes us happy because they become just another customer like all our retail customers. So the business is taking that shape and direction now, and that gives us a lot more comfort now.
And are the margins similar?
Yeah. So we treat that business just like any other business. So there's nothing different about it.
Okay. Another question was on this flooring business for us. What kind of asset turnover we can expect into this business, sir?
So between 1.5 and 2 times, but it'll take a while for us to develop those kinds of as you'll appreciate, this like any new product, any new business that you get into. So, but 1.5 to 2 times is what we expect.
So it would be similar to our businesses right now. So
right now we are less than that. So we are more 1 time than 1.5 to 2. So this will be a better turns business actually.
And primarily, largely domestic.
Right.
Okay. Thanks a lot, sir.
Thank you. We'll take our next question from the line of Resham Jain from DSP BlackRock. Please go ahead.
Yeah, thank you, sir. And
hi,
sir. So I was just looking at this Qtr4 where our margin is roughly around, including other income, around 19%.
Mm-hmm.
And in FY19, now we are guiding for roughly 10% volume growth.
Mm-hmm.
And I think in textiles, typically with this incremental volume growth, majority of the incremental gross profit, the other expenses or the below gross profit expenses typically don't increase significantly. So there should be a good amount of operating leverage, which we were not able to get this year, and that's why the margins are a little lower. It seems that the margin guidance, which you are saying 19-20%, is there a scope for upside risk to this?
So we like to be cautious when we guide Resham. But, so there are some valid reasons why we have tried to be conservative on this. And, clearly the commodity prices are moving up. Oil has gone through the roof. Now, some of the inputs that we use are oil derivatives. Fuel prices have moved up. Cotton prices will move up in line with the exchange rates and so on and so forth. So, we like to be a little cautious when we this guide and, thankfully with the exchange rate moving in the direction that it is moving. So, we are now starting to sell currency for FY20. So, and that is all 70 plus. So this at a future date, hopefully this, it should start reflecting into margins one way or the other. And so, so thoda sa yaar hum log we try and be cautious while we are guiding.
Okay. And so the second question is, currently the branded business which we have, mostly the Christie, and we have also launched in US. With this currency depreciation, typically maybe some of this gain we need to pass to the retailer because of the competitive intensity. But in the brands, is the pricing in our hands, or we have to, it is like negotiated with the retailers where we are placing?
It is entirely in our hands. So, Christie determines its own prices. Basis this we decide, we determine our own prices. It's the ingredient brands where this we don't have that control. So this, like for example, Hygro would be a sold in ingredient brand into our clients. So those, let's say this we cannot leverage. But honestly, we are not seeing any renegotiation of pricing with our clients, Resham.
No, what I'm saying is in the branded part of the international business which we have, is there a scope of that business margin to move up or volume to go up, because we will be able to offer more discounts now because the pricing part is in our hand. The whole currency gain partially in the private label, we need to pass on some of that.
So see, look, we have firm contracts with our client which normally run into 2-3 years unless something substantial changes. So normally, see, prices don't change midway, Resham. This as we sell in a program with our clients. So, unless there is something very disruptive that happens, prices generally wouldn't change. So we are not expecting, honestly, price discussions with any of our clients. So it will, of course, be helpful for us to make future sales on our branded products to sell in newer programs to our clients. So, the exchange rates will always be helpful with the newer businesses that we discuss with our customers.
Right. And so finally, you mentioned 30 innovated products now in the portfolio, and 3 of them introduced this year. Any of this product which you feel has a scope to become like an Hygro?
So actually not a product, but this as a concept, we are getting increasingly more confident about the WellTrack, let's say this initiative that we launched, Resham. So, it's giving us more and more confidence. I think we are going to sell into our clients with this concept. It's just giving them, let's say, that bit of assurance that they are looking for. And, so this, our confidence on WellTrack continues to grow. So I think, this, hopefully, this as time goes by, and see, look, brands take a little time to develop. So, this, we are getting pretty hopeful on the WellTrack brand more than, so, that's the number one thing right now that we would rest our hopes on.
Okay. Thank you, sir, and best of luck.
Thank you.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference back to the management for closing comments. Over to you, sir.
Thank you, everybody. And we'll be happy to answer more questions if you have. So either you can get in touch with Harish or me. And thanks a lot for your support. Look forward to interacting with you in coming weeks as well. Thank you, everybody.